Europe is already in an energy crisis, and the inflation in many European countries has reached double-digit territory. Everything is getting more expensive for Europeans, making many investors wonder how the economic slowdown impacts the P2P lending industry, which is precisely what we'll be discussing today. I'm your host Jakub from P2P Empire, and on this channel we cover everything there is to know about P2P lending and how you can use it to minimize the impact of inflation on your savings. So if you want to see more of that, subscribe and hit the notification bell to not miss out on future videos. Looking at this table, you can see that the Eastern European and Baltic countries are impacted the most by the rising prices. Many Europeans are investing in loans on platforms based in those countries or lenders lending money in those markets. Let's have a look at how this situation is impacting the default rate and the performance of your investments. In this video, we will look at 3 different lenders with various loan types to get an idea of how they cope with the current macroeconomic environment. I will also share some of my thoughts that might help you fine-tune your P2P lending strategy and reduce the impact of inflation. So let's first look at the impact of the inflation on LANDE's loan book. LANDE is a crowd lending platform based in Riga which focuses on lending money to farmers. The platform offers secured investments, and if you want to learn more about how they operate, I suggest watching my recent visit to LANDE's headquarters, where we dive deeper into the platform's business model. When I asked the CEO Nikita Gonchars about how inflation impacts LANDE's lending practices, he told me that the current crisis is increasing the demand for working capital and machinery loans from farmers. Food prices are getting higher, meaning the demand for financing is also increasing. The quality of the loan portfolio remains high as the prices for food increases as well. Hence, the profits for farmers grew accordingly. Farmers basically get higher prices for their products as the demand for food is growing. LANDE also told me they would continue expanding into various European countries and introduce new loan types of collateral based on the farmers' activity. So as you can see, inflation has not harmed LANDE's lending business, right the opposite. The same is also valid for LANDE's competitor Heavy Finance, which primarily lends money in Lithuania. Let's now look at how the current crisis impacts EstateGuru, where the default rate have increased in particular markets in the recent months. EstateGuru is one of the best and most established crowdlending platforms focusing on financing mortgage-backed loans. When EstateGuru is scoring the borrower, they look at the exit strategy, which basically means that they evaluate whether the borrower will be able to repay the loan at the end of the loan term. Now, if the loan was funded a year ago, the platform had a different risk evaluation method, as we were in a different market back then. The current inflation rates and the energy crisis may impact the borrower's exit strategy significantly, leading to the higher number of delayed or even defaulted loans. EstateGuru expects a short-term fluctuation in the default rate while targeting a 5% default rate in the long run. They have significantly tightened the credit policy for newly established development loans and hired additional staff to help deal with the debt collection. The company shared with me that they act more proactively with borrowers, helping to decrease the number of delayed loans. While the debt collection process varies in every country, EstateGuru is not afraid to enforce the contractual obligation and terminate the loan agreements if the borrower is not fulfilling debt loan terms. If you analyze the lender's portfolio, you will notice that the Baltic countries have the lowest default rate despite the highest inflation. EstateGuru is expecting some difficulties in the construction market as the prices for construction materials are soaring. On the other hand, the platform expects higher demand in the real estate market, which means that there will be plenty of good opportunities for investors to earn passive income by investing in mortgage-backed loans. Now that we have looked at some crowdlending platforms that offer investments in secured loans, you might wonder what the situation looks like on P2P lending platforms where you fund consumer loans. To provide accurate information, I contacted the CEO of the Aventus Group lender in Poland, Anna Kowalewska, to tell me how inflation impacts their portfolio. She told me that the lender is constantly monitoring their environment and adjusting its credit scoring policies. The current economic slowdown in Europe did not happen suddenly, so the loan originator had time to research the market and adapt to the current situation. You should know that investors are not interested in loans that are not being repaid, and the same is also valid for responsible lenders. A lending company is not interested in high-risk borrowers who cannot repay the debt, so it constantly tightens its credit policies and scoring models and temporarily lowers the maximum loan amount for one borrower. While the demand for short-term loans might increase due to the increase in prices, the loan volumes might decrease, mainly to the tighter scoring models. So that has been the feedback from what I believe are responsible players in the P2P and car lending industry. While the number of delayed loans or the default rate might increase in the short term, P2P lending will not go away. People will always need to borrow money, and the lending companies will have to make sure to lend only to those who can also repay it. While the energy crisis and inflation are harming your savings and perhaps even your stock positions, it favors legitimate lending companies that can still generate profits for P2P investors. Saving money in your bank account is likely one of the least favorable financial decisions in 2022, as you lose up to 20% of buying power. P2P lending is not offering 100% protection against inflation, but it is an interesting tool you should use to mitigate the negative impact on your finances. While the market environment is quite dynamic, the risk for established lenders has not changed. Loan originators who managed to protect investors' interests during 2020 as many governments introduced moratoriums due to the impact of the global pandemic are a good fit for investors seeking a stable and reliable return of around 10% per year. Of course, domestic challenges in specific markets combined with extreme inflation will harm lending originators, especially startups that are not yet established in dedicated markets. So if you want to avoid that high risk, focus on more established lenders in markets with lower geopolitical risks. You will never be able to eliminate the risk entirely, but investing on top-rated platforms on P2P Empire is an excellent way to mitigate the risk and maximize your returns. While the energy crisis in Europe won't be resolved in a few months, solid lenders will be able to weather this economic environment as well. Monitoring the performance of your portfolio and the communication from the P2P lending platform where you invest is essential to protect your assets. I also recommend bookmarking our news section so you're up to date about the latest developments in the P2P lending industry. P2P lending is not the only tool that will help you protect your savings. Being mindful about how much energy you consume and researching alternative solutions will also yield a solid return. If you found this video helpful, do me a favor and hit the like button. Also let me know in the comments below whether you have changed something in your investment strategy as inflation in Europe has increased. Thanks for watching, and I will catch you in the next one.